Hi, today I'm joined by Trent Fleskens, Managing Director of Strategic Property Group. Now, if you're interested in property development or you get my weekly newsletter, it's likely you've already heard of Trent. He produces the weekly podcast, The Perth Property Show, and is also a regular commentator on 6PR. Now, Trent's business covers a wide range of property investment services, but today I wanted to talk to Trent specifically about his top tips for those who are thinking about testing the waters with subdividing and developing, because it's a question that I get asked a lot by people that have got subdividable blocks or thinking of, looking at that as an opportunity, an investment opportunity, and also where Trent thinks the current opportunities are in the Perth market. Welcome, Trent.
Welcome. Thanks, Natalie. I appreciate you giving me a nice call on this beautiful morning.
You're most welcome. Now, Trent, let's start with your weekly podcast, The Perth Property Show. So each week you talk about a specific real estate topic, and that varies all the time. And you also feature guest agents to talk about particular Perth suburbs. How did the show come about?
Look, the Perth Property Show really is a passion project of mine. My little baby, I guess, filling the void, the vacuum of information in Western Australia. I think for all those property tragics out there, we'd recognise pretty easily that there's not a lot of good information out there. If you look it up, property seminar, it's usually some cowboy or spruiker from the East Coast trying to sell you some ridiculous house and land package in the middle of nowhere in Queensland. We all are pretty accustomed to that these days, so we're all used to trying to be people. So the idea of the property was to literally just have Western authorities, the number one realist, the number one people in that, whether it's valuation or accounting or finance or anything along those lines with regard to property, to provide a safe place for people to learn about property without being sold. So we're at episode 76 now. You've been on a couple of times for Inglewood and Bedford because you're the number one agent in those suburbs. And it's as I said, it's a safe place for people to get their weekly consumption of property information. Yeah, no, thanks, Trent. And what's the kind of the, I guess I can't say viewership or readership, the listenership kind of rating like, because I have found out since I was on the episode that a number of my clients actually do tune in, and they're like, they listen to it religiously. Oh, great. Yeah. And look, we have quite a few thousand people listen every month. And it is, from my understanding, the number one listened to podcast regarding property in Western Australia. So very proud about that. And I think it definitely just comes down to the quality of information that the people that come on the show provide. It's a no bullshit show, Nat, as you know. It's a very concise and informative show, and there's no advertising or chit chat. It's very much providing information to listeners.
Yeah, no, it's great. And if people aren't already listening to it, certainly if they're interested in developing and subdividing, they should certainly be tuning in. Now, Trent, whilst your business isn't all about subdividing and developing, it is a key focus of what you do. What sort of drew you to pursue that path?
Now, I think most of us have grown up with our parents buying an investment property and just making money holding it, right? If you held property through the 70s and 80s and 90s and early 2000s, you're a property investment expert because you made money doing nothing. And the reality is, for someone my age, over the last 10 years since I started developing 10 years ago, I recognised that for me, simply being beholden to the market wasn't a strong enough investment strategy. Because buying a share and just saying, hey, let's see what happens, or buying a property and saying, hey, I hope it goes well in the next 10 years, it wasn't enough to I guess, secure and also fast track my wealth generation. If you are on the same ladder as everyone else, climbing at the same speed relative to everyone else, you're never getting anywhere, right? So there needs to be a way to be able to jump the ladder, and that is what property development affords people. It's their ability to manufacture wealth in your purchase quickly, create that 150, 200, $250,000, and then use that to expand your portfolio a lot quicker than everyone else who was just waiting to make passive gains in the market. So the idea would be that you should be able to invest in a property that you can do a development on, pull the equity out from the capital gains you make, and it still be a good positively geared development that you can hold whilst you're using the profit you've made to go on to another one, and not just wait, or not just sell, because if you sell, you're never making any money in the market either if there were passive gains. So it's about being able to capitalize on both sides of the equation and not being passive. I think passive is a dirty word in investment. You should not be passive in any investment you do. We're active.
So Trent, look, I've had clients that have done really well out of subdividing and developing, and I've also had clients who said it was one of the worst mistakes they've ever made and wish they'd never gone into it. And I'm sure you've got, you're aware of, some of those stories as well. If you've got a subdividable block, does it follow that you should always subdivide?
It's all about reverse engineering the numbers. If you've bought a lemon, you cannot turn it into lemonade. It doesn't matter what tricks you have in your book. If you purchase the property at the too high a price to make profit through subdivision, it is very possible that if you go through the process of the subdivision, you will pay more than the end result revenues will be. You will actually lose money doing a subdivision. So for us, it's very important that we are reverse engineering from the sales side of things, where you come in, back through the construction cost, if it does exist, and the subdivision costs, the profit we need to make, and then that's the price point. So you'll be in a situation where I can recognize that, look, on the market, that property in Bedford might be worth $750,000. But to me, if I'm going to do a subdivision and development on that property, I'm not going to pay you, Natalie, more than 700. And that's not to say it might not be worth 750, but we'll just let it go at that price. It needs to be 700 for us to get into that and do a development and make enough profit and have enough fat there for us for our risk for reward spectrum. I think a lot of people that do a subdivision, they've gotten in on the idea from the barbecue, sitting around the barbecue listening to Steve-O say he did a great one, and they go and buy a property because the real estate, it's a subdivision property and inherently it's profitable. But if you went and paid it 100 grand too much for it, for the opportunity to do that subdivision, and didn't actually do your numbers properly by underestimating the costs or just not understanding the costs and overestimating the revenues, then you're walking into a loss from day one. And that is really the most important thing, is to be very pragmatic and astute and unemotional and unegotistical about subdivision and investment, so that you get the outcome you want, which is profit.
Yeah. What about if it's your own block? So you're, sitting in your own home, at probably the front of the lot, and you've got the subdivision potential in your backyard.
If you're in a situation like that, it will be very rare that not doing the subdivision would be the best outcome. Most people who buy a property like that, who have a property that's subdividable, if you sell it before you subdivide it, you are giving away a certain percentage of that profit to the buyer. If the buyer knows what they're doing, they will not buy it for you at a price where they make no profit, right? So the price they will pay for it, if it is a developer or someone looking to do a subdivision, there has to be profit in it for them. So if you don't do that subdivision, they will make the profit. So if you have the capacity financially to afford to do that subdivision, which in Inglewood and Bedford especially, generally would probably cost about 40 or 50 grand. If you have the capacity within your savings or the equity in your home to get that done, it will generally, I would say, always be more profitable for you to do your own subdivision, sell 2 houses or 2 blocks of land, than to just sell it as is and let someone like me make that money off of you.
Yeah. Trent, one of the things I see with people when they're subdividing and then going on to developing is that they often miss the market in terms of what they should be putting on the rear block. Is that something that you see that's common as well?
Yeah, I see 2 things actually. One I see is that people just build for the sake of it. If you can't demonstrate a profit to spend the extra 300 grand building that home and then be able to make an extra 350, 400, 450 over and above the value of the land doing it. Don't build, just sell the land, because there's no point going and spending 300 grand to make negative 50 grand out of doing that, right? You may as well just sell the land. So that's the first point. Don't just build for the sake of it. You need to demonstrate profit from doing that. And secondly, missing the mark in terms of the build, definitely. Biggest isn't always best. Going and overspending on something to squeeze this massive thing on a block doesn't actually mean that you're going to hit the market that you're looking to target. Most importantly, you need to recognize that most people buy within their suburb. It's a pretty high percentage. I'm sure you'll see as well, Nat. A lot of people who are buying have just sold down the road. If you're looking to sell a property that is more expensive than most of the properties around the area, it's pretty hard to get those people to afford what you're building. So it doesn't make sense to stick your neck out above the fence, if that makes sense in that situation. Make sure your price point is affordable. There's no point trying to sell a property at Mount Lawley prices in Bedford. It's not going to happen. So don't build something to that effect. Meet your market definitely about what people can afford, but also what people need. If you're looking towards a downsizing market, don't put the master bedroom upstairs. Don't have a sliding robe. Have a walk-in robe. Have nice facilities for comfort and lifestyle, and have a product that people need. And the easiest way to understand that is to ask the local agent, probably in this case being you, Natalie, what it is that's easiest for you to sell. Because it's easiest for you to sell, it means that it's the least sales risk for that person doing that development. And that's the most important thing. The biggest thing to mitigate along the whole spectrum of development is sales risk. Because if you can't sell it, it's worth nothing to you. One thing that's worth more than a $2 million development you can't sell is a $500,000 development you can sell.
Yeah, good point. And it's funny, you're talking about understanding your market, because sometimes I see it happen the other way. Like, people are so focused on profit that they undershoot it in their renovations. You know, they'll put in Laminex bench tops when it should have been stone all the way. You know, just trying to make shortcuts and not understanding that in their area, their downsizer market might be coming from a $1.5–2 million home, and they're looking to get something that's really good quality in the 7s and, you know, potentially even the 8s. And they will pay for the right thing, but it's got to have that amenity, you know, thing like you're talking about, the walk-in wardrobe, you know, with showers, you know, no hobs. So you can kind of, if you had a walk-up, you can kind of slide right in, you know, making single level or main bedroom downstairs. So just not really understanding the market and who the buyers are.
I couldn't have said it any better than that. Those are the specifics that a selling agent can provide to you as a developer. But you're right. I see a lot of people try and cheap out on the front end because they can't quantify the back end. It generally goes counter-logical to that, really. And when you're doing a renovation, as long as you're not over-capitalizing for the suburb, really, the more that you spend on these renovations, the better chance that you at least get your money back for it and that you'll sell it quicker. Where areas like Inglewood and Bedford, these people aren't strapped for cash generally. As you said, they're happy to pay for a good product, but they will not buy an average Morley level product. It's just, that's why they're in Inglewood, right?
Yeah.
So cheaping out on the front end is just shooting yourself in the foot.
Yeah. So, Trent, I think part of the issue I see with a lot of people going into subdividing and developing is that they don't really understand the process and what's involved. You know, they don't understand the time frames, they don't understand the costs, they don't understand the actual activities. So they're not necessarily able to kind of put that spreadsheet together and work backwards and kind of look at, you know, what they're going to be up for, and, you know, whether or not it's worth their while to start the process in the first place. How do people better educate themselves before they start?
Well, we've got all the resources you need for that education, actually. First, listen to the podcast. There's a lot of episodes on subdivision and development. Secondly, we have ebooks on our website at strategicpropertygroup.com.au. Next Tuesday, we have a free webinar, Introduction to Property Development. So you can listen to that next Tuesday at 5:30 p.m. I can give you the link for that, Nat, and you can share
that would be great.
that if you want. I hold a 4-hour masterclass at UWA, which the next one looks like will be the 20th of June. That's $49, and it's just a 4-hour download from my brain to yours of case studies, exercises, all the practicalities that come with doing a development. So that pretty much should get you as far along as you need to then get to a point where you're doing a pre-feasibility. We can provide those services as well, and then we can provide those project management services. I would definitely suggest, if you have not done a subdivision before, do not do it yourself. For the few $1,000s of project management fees to get someone professionally to do it for you, they'll save you on the contractors anyway. They'll save that money back pretty much too, and they'll also save it in the time efficiency. The space of 3 to 8 months really will be saved getting a professional to do the subdivision for you, and that's worth more to you in interest, let alone anything else, than the cost of a project manager. So I think educate yourself. One great piece of advice I've been told is educate yourself enough not to become an expert in the topic, but to keep your experts honest. Once you get to that stage, you can invest with confidence and also continue to spend most of your time getting better at what it is you're good at.
Yeah, great advice, Trent. So on that, what are the top 2 mistakes that you see people make when it comes to subdividing and developing? I mean, we've covered some of that off.
Yeah, the first one is definitely overpaying for the initial property itself. And if you already got the property, it is probably not understanding the block size and dimensions required for the build and also for the market. That I think those 2 are really quite important factors. On top of that, though, just underestimating the costs. There are still a lot of people out there who think subdivision costs $3,000 and a couple of forms. It's at least 30 at a minimum, average $50,000 to do a subdivision. And if you don't factor that in, if you don't have the cash to do it, you'll never get it done. No one's giving you a loan for that to get that done. So being aware of those costs in the first place, which leads into obviously paying the right price for that block if it is the one that you're going to be buying to make it worthwhile.
You raised a really good point there, Trent, about block size and dimensions. And I think, people, they look at the R codes and they think, oh, it's, 30, I can fit 3 on that block. Whereas, when it actually comes down to the practicalities of building something, it might only be a duplex lot, and yet they've gone and paid triplex prices. Yep.
Yeah, 100%. And look, that's a nice thing for a selling agent to not mention too much, I guess, is the capacity. But at the end of the day, you do need to understand your market. If the market isn't that keen on smaller units, or if they expect townhouses out of those smaller blocks, but you can't afford to build townhouses, then you really need to stick to what the market will pay for. And if it's not profitable to do a duplex development at the price that the seller can achieve, otherwise selling it to anyone else, don't buy it. It's pretty simple. You don't have to buy the property if you can't make enough money out of it. There will be other properties available. And I think it's a very unique market in Inglewood, especially in Bedford as well, where, as I said before, the price point allows for a variation of property, but the demographic generally wants some pretty good quality product, and they don't really want dog boxes. So just because you could doesn't mean you should, is probably how I would leave that answer.
Yeah, no, you're right. Turning to the Perth market, Trent, what do you think is going to happen? I mean, look, I know we don't have crystal balls, but we've both been in the market and in the industry a long time. What do you see playing out in Perth? And I know you spend a lot of time looking at the stats. And where do you see the opportunities going forward in the next sort of 6 to 12 months?
Yeah, I've just run a webinar on that as well, and I'll give you a link to that for your readership to listen through if you like as well. It's an hour and a half of just, as you said, stats and graphs and some heavy information. But I guess some of the encouraging information coming out of that is going forward is in the last 3 recessions, we never had any price drops, which is what it demonstrates to me is that although we might see price drops, it's not linked to a recession. in terms of stock market recession. And that's one interesting point. Two, the Curtin Economics Centre has put out information about where they forecast all of the job losses to be. Unfortunately, for that socioeconomic segment, most of the job losses are young people, part-time work, and people making under $50,000 a year. That's a very specific segment. And I guess the silver lining to that very situation for a lot of people is in Inglewood and Bedford. That's not many people who own property in Inglewood and Bedford or are looking to buy property in Inglewood and Bedford. So my advice, or not my advice, my speculation at the moment is that whilst this will have an impact on people, certainly be in the bottom quartile of property values and the bottom quartile of socioeconomics in Perth, unfortunately, the exact same people that have been absolutely pummeled over the last 5 years as well, and are all in negative equity. So what we're going to see things. One, the bottom quartile of properties are going to continually get kicked in the teeth. Top two quartiles of properties, I would have thought, if you're talking to most of your people around Inglewood and Bedford, most of them haven't lost their job. They're probably working from home, but that's about as bad as it got. They're saving a lot of money because their interest rates are so low now, so they've got a lot of cash starting to line up. They haven't been spending their money living the life on Beaufort Street, unfortunately, but good for their back pockets, right? So I think the situation really is going to continue to widen the wealth gap in Western Australia. What I'm most interested in seeing is how things are going to be going after the mortgage deferrals finish up in the last quarter of this year. Up until that point, we'll see no mortgage defaults, no mortgage stress, because everyone's getting a free ride right now. So if there is going to be a flood of property coming onto the market, I think one, it will be in the bottom quarter prices and last quartile of this year.
Yeah, no, I agree, Trent. And I watched your seminar the other week and really loved all of the stats that you presented. And I've used that talking to buyers actually a few times in the last couple of weeks, just to say the Perth market is not homogeneous. It never has been. You need to understand that there are different factors at play, and there are micro markets. Look, there are micro markets within suburbs, let alone, different markets for different suburbs across Perth. So what are the sorts of things that buyers do you think should be avoiding? It sounds like probably not buying in those areas where there's already mortgage stress. Is there any other things that you think people should be avoiding over the next sort of 6 to 12 months when it comes to property investing?
If you find a property that you like, especially as an owner-occupier, buy it. It won't come up again. It will be sold in the next 6 months. Transaction levels are already above what they were a year ago when we had the election. And we're in the middle of a pandemic right now. So things are starting to normalize pretty quickly. That's the first point. Secondly, yes, I would stay away from the bottom quartile prices in Perth. Luckily, Bedford and Inglewood have none of that. Don't invest in property in areas where other people have financial problems, because that all circulates around, buy and sell in their suburb. If you're buying into a suburb that other people have negative equity, they got to fall there. Could be your and be great rental. Stay away from the bottom quartile of property. Stay away from areas where people you would expect have lost their jobs in this space, if they are property owners or if they are tenants even, because that obviously causes issues. I strongly believe that whilst this pandemic is causing big structural issues, a big portion of that is in the East Coast, where it relies a lot more on migration. In the last 5 years, we've had 13,000 people come into Western Australia. 11,000 of those were last year. The 5 years before that, we had 108,000 people come into Western Australia. Now, the supply levels of property in the market reflect demand. So whilst we won't have much migration coming in for the next couple of years in Australia, we've not been supplying in that market to relate anyway. So it's not a massive factor. Whereas you look at the East Coast, they've got 90,000 people a year coming into Melbourne. If that turns to zero and they're building 90 or 45,000 homes a year to cater for those people, that starts to cause a massive supply. We haven't been doing that. We have our building approval rates 40% of what they were 6 years ago. The builders are on their knees. So I don't see a massive structural problem in terms of demand and supply across the market in areas where people haven't lost their jobs. So a long-winded answer is, as long as you're investing in buying into areas that are not affected by that socio-economic segment, I don't see any reason why we won't continue to see the same tight fundamentals we had at the start of the year that any avid property investor would have recognized already. It hasn't changed.
Yeah, no, I agree with you there, Trent. So, Trent, thank you so much. That's been fantastic information, and it'll be great to get those extra links that I can pass on to everyone if they want to kind of learn more and know more. What's the best? So, I'll send those out, but otherwise, your website, that would be the best way for kind of people to access a lot of the information you provide, sort of subscribe to the show, find out about upcoming sort of seminars.
Yeah, strategicpropertygroup.com.au, that should have the segment for the property show, and there should be a segment for our upcoming seminar, the webinars and masterclasses as well. So that's on there. You can check Eventbrite too. So those are probably the best avenues to learn. Facebook as well, obviously.
Yeah, of course. Yeah. Trent, thank you so much. Is there anything I've not covered that you want to say before we start?
I think there's a really good summary of what's important to people in Inglewood and Bedford right now, especially those two areas where you're most prolific. I think we're in a really interesting spot, especially in Bedford, where you're going to have a great level of uplift pushing you in the next 10 years from Morley. Morley is about to have a huge change with a brand new train station called the Morley train station, and an upgrade to the Bayswater train station where it will turn into a mega hub of 3 train lines at the Bayswater train station. So as much as it might not specifically affect Bedford, the fact that Morley is going to be seeing some big growth in the next decade, that will have effects on Bedford because of just the way that prices ripple. So if you can afford to be in Bedford, I'd be buying in Bedford if I was.
Yeah, I agree. I think it'll right up the Beaufort Street corridor. Trent, thank you. Thanks for your time, and look forward to seeing you again soon. Cheers.
See you guys. Ciao.